Good day, traders. How y'all doing today? I hope you're all doing just fine on this mid-January freeze. Yes, January 17th, and wow, is it cold. You know, not that you need to know this, but the last time we had a cold snap like this, and we've only been at it now 5 days, but back in 2013, we had minus, like right now it's minus 16 or something like that. But back in 2013, for 2 months straight, I'm talking 8, I think it was longer. I think it was 9 weeks straight. It was like minus 25. It was so cold. Anyway, it's really cold here. I'm like freezing almost in my apartment because my damn landlord put a lock on my thermostat. They got hundreds of millions of dollars, these bastards, and they want to freeze us to make more money. You can't take the fucking money with you, you assholes. Some people, I tell you, they're so stupid. They believe that, oh, I'm going to make all this money. Yeah, you can't take it with you. When you die, you can't take it with you. You got to spend it all right here, right now. Just like you got to be in the trade right here, right now. Anyway, let's get to this. So we're looking at the NASDAQ here, okay? And right from the UK session, we had divergence, okay? Yep. And there it is on the OSMA, okay? And we would have got short right there. And how far did that go down? Well, it went down like 190 whatever points. Look at what it's doing now. It's just messing with people. That's what it's doing. Anyway, so that was the one trade on the 5-minute. Now let me show you all the beautiful trades on the 1 minute. Like I told you yesterday, it's best to trade the 1 minute because the market is moving so fast. Okay, so here's the open. We had our little spike up and it went like a couple ticks above this little spike up and said, hello, tag, you're it. That's what they did. Yeah, gotta love them, eh? For doing this kind of stuff. So even if you got in right here, you let 5 minutes pass and it closed down, the likelihood was probably 80%. It's going to go down. But you never know on the opening, right? Because they could take it down like this and then shoot it up and it could go another 200 points up above this high. So you don't know. But it's high risk trading the open, as you know. But anyway, so there was that trade. Your stop would have been right there. Oh, I gotta draw you gotta draw this stuff on there. There we go. Double top. And right there. Okay. This is a 1 minute we're looking at, ladies and gentlemen. See, right up there, 1 minute. Okay. So, stop would have been right at the swing high, 47 points. Did it go down 47? Oh, not yet. Only 39. But of course, if you kept in it, stayed in it, and yeah, you definitely got your 47 points, right? And look what we have here. A beautiful, beautiful thing. Okay. First, we had the buy fake, right? And then they smacked it down. Remember when I used to call it the smackdown? Well, now I call it, I forgot what I call it. Turn up, turn down. Turn up, turn down. Okay, so you would have got short right in here. Right there. I put an arrow on it today. Okay, you would have got short there. And you could have jumped. This is where you should be jumping in, as the market's moving so freaking fast. In 1 minute, it went down 22, and then, Kept going, kept down, going down, 44. To the bottom, max pips, points, ticks, potential, 74 ticks. Okay? Here's another one right here. But also along the way, I want to show you, not this one so much, but this one. Oh, yeah. It qualifies because the bullish candle closed right on the 5. Remember, it has to close real close to the 5. So yeah, so you want it right on the opening here, higher close, sell it, down it goes. And here's another hook down right here, ladies and gentlemen. Right here. Okay. There it is. You would have got short right here at the low of the day, and it went down quickly, like 26 points. Okay. Then, if you were brave to do it, I wouldn't do it. We just come down all this way, right? We have a low and a lower low. And we have divergence. Yes, indeed. So we would have got long right here. I believe it was right here we would have got long. Your stop at the swing low, 32 points. Did we get 32 points? We got 34 points. We definitely got 32 points. Okay? You're 1-to-1. And then it started doing a zigzag up and down, as you can see. Yeah. Nothing else in here I would call. But look how well we done here. Winner, 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 winner. All winners. Gotta love these setups. Okay, let's look at the S and the P now. We could easily say right here to right there, there's only like just a few ticks, you know, like 7 ticks. It's nothing, nothing, right? And is that from there? Yeah, right there. It's right where I thought. Right there and right down. I know I got the other lines on there. Sorry about that. I don't want to remove them all. But anyway, that was the divergence. Double top. And you would have sold right there. What time do I have that at? Oh, at 8 o'clock. Oh, that's at 8 o'clock. So this is the trade before the stock market open. Stock market open. It's way over here. Okay. So anyway, you would have got short right there. And our stop at the swing high, 4.5 points. And total points, it went down around 22 points or so. It's a beautiful thing. So this here, it's kind of, it is a buy fake if we count the wick here too. It's a buy fake. It's one of our hook downs right here. Right there. And you would have got, geez, my computer's doing some weird things today. Wouldn't close my order, and then the tool I use, I don't know if it's the Forex broker or if it's my tool. I don't know. But it was sticking, and I'd click on the button to close or buy or sell, and it would stick there. It would stick closed. Like it wouldn't like click it and bounce off of it. You know what I mean? And it wouldn't get me in or out of the order. So I'm going, what the hell? So I shut it off, restarted it, and then I toggled through the time frames. Like I'd press on all the time frames like this. See, look, it's still sticking. Look at this. Let's see, now it's moving fast. But anyway, that's what was happening, and it was pissing me off. So then I just stopped. I did a couple trades today and just stopped. But anyway, so you would have sold it right here and it went down like 9 points. Okay, there's divergence here too. Could draw it in like that. It's probably, see, sometimes it's off a little. You gotta put it like into there, in the middle there. See, now it looks more valid, see. Right here. So you would have got long right in here. That's 5 points so far. Stop at the swing low, 6.5 points. It'll probably go there soon. Okay, let's look at the Dow. What did it do today? Oh, that did the opposite? Yeah. This is the open, right? Yeah. Yeah. You know, these traders who think, oh, if the, you know, they try and follow two different instruments and they use one to compare to get into the other. That works sometimes, but sometimes it doesn't. It's not always when the S&P follows the Nasdaq. It doesn't do that all the time. Okay, so you can see here it just went up. And anyway, we had like whatever double top here. We had a double bottom here. You know the usual stuff all the time. This is what they do. They have double tops and bottoms just like that. There's the divergence there. Yeah. Bye-bye. And right here. So you would have got short right up there at 8 o'clock, I believe. Yes, 1500, yeah. You would have sold it there, stop at the swing top, and down it went 84 points. Isn't that amazing how they do these things and then they go on their jolly way down? Did they come back up here and get your stop? No. What about here? What about here? Look. And my line didn't cross down until here when we were ready to get in the trade. See? Didn't go back here to get your stop. Same with right here. See? Your stop would be right here. And once it crossed up, the 5 above the 7, see? Everything falls into place. This is what I've been trying to explain to you guys for a long time. How it does it or why it does it, I don't flippin' know, but it does it. So you can see this big spike up here with, this was the open. So then you would have got long right there. Okay, right on the opening of this candle. Okay, you would have got long right there. Your stop would have been 78 points. Did it go up 78 points? Oh yeah, went up 123 points. But do you see right here where we got in? We're up here. It didn't come back down here and stop us out and get us. Everything falls into place. When you first look for the setup and you have the reason to get in and you get in and it just keeps going on down its jolly way from over here, or it goes up on its jolly way up here. Gotta love it. Let's move on now to the pound dollar. Oh, I need some water. Look at that up here. Look at this. Look at this. See it? Double top. And it's going down. So when you draw it on here and it's going down, where do you think the price is going to go? It's going to go down. Do. See that shit, man? It's an algorithm. 80% of the time, it's an algorithm. I'm telling you. It's like, how do I keep seeing these same situations over and over again? And when you get in the trade, it doesn't go back up here to get your stop. See what I mean? When you get into this one over here, which I'll show you in a sec, it didn't go back to your stop. Let me show you. We got low and lower. Yeah, right to there. See, it didn't cross here yet, so we didn't get in yet. We only got in here because we have to wait for the 5 to cross up above the 7, and we need a nice bullish candle to close up above the 2 moving averages here. See? So, and here's the divergence right here, see? See, my good friends? There you go. There you have it. Stop would be right there. Pound dollar, 14 and a half pips. Did we get it? I don't think so. I don't think so. Oh, 13.4. We missed it by 0.6 of a pip. We missed our target, but we're probably going to get it right now. Look at the price. It's coming. It's coming. There. We would have just cashed in now our 1-to-1 win-loss ratio. 14 pip stop, 14 pip take profit. We just hit it. And look at all this barcode printing shit here. Did we come back down here where our stop was? No. No, sir. No, ma'am. Let's move on now to the Euro USD, which is very, very choppy. Wow. Perfect double top right here. And it's pointing down here. So what does that mean? Does that mean the price is going to go down? Yes, that's what it means. So you would have got short right there when the 5 crossed down below the 7. That's why we would get in there. Why wouldn't we get in over here? Because the 5 was still above the 7. It was making love to the 7. It was kissing it. So once it broke away from it, down we went. We had a little retracement here, but then down it goes. Definitely got our 7 pips. We got 7 pips right there. We would have got it before it even retraced. We would have got our 1-to-1 win-loss ratio. I know it sounds crazy to go for a 7 pip target, but it's dynamic. You see, every trade is different. Every stop loss is different. It's dynamic. So it's not like you're trying to do a bracket order, and I can't talk right now. Jesus. Excuse me. If I go pause it, I'll probably not unpause it, and I'll do the rest of the video, and it'll be blank. So I got to cough while I'm doing this. I'm sorry. Anyway. So, what was this? See, I'm lost in thought. I'm lost in thought here. Oh, shit. Anyway, it was a winning trade. It was a winning trade. Then we came down here, retrace, come down. There was divergence here. Let me show you. I'll just show you. Here, yeah. Here you go. It's like that. I myself would not take this trade. Why? Because such a huge candle up. Even though it looks like a huge candle, but it's not. It's 14 pips. So if you would have got in here, you never would have got your 14 pips. You would have got 11. So I wouldn't have done it. You needed, yeah, 13 and a half pips. So that's it for the euro. Pound yen, let's see what it did. Oh, I was going to do this trade today, and it was like right here. And I was going, should I buy it and try it? I'm saying, oh. You see the spread right here? 0.7, 0.8. That's like 0.5. It's like half a pip. Okay? When I was trading this back in 2000, I think it was 6 and 7, it was 9 pips. The freaking spread was 9 pips. Plus commissions on top of it. It's crazy, man. And like 7, 8 years before that, when Clinton put through the bill for Forex so that retail investors could trade it, the pips were like another 10 or 15 pips added on to what I just said. So if you were trading the pound yen in 1999 or 2000, the spread was like 25 pips, man. 25 pips. Crazy bullshit, man. They've come down a lot since then. As you can see, it's like 0.7 of a pip now. Anyway, that's why I didn't get in this trade today, because I hate the spread on this thing, and it does wacko things. But look what it did. It did justice. So anyway, double bottom right there like that. And you would have got in. Yeah, I think it's like right here. It doesn't look like it was the place to get in, but we got in. Have you ever heard of kissing candles? I heard about it from the SNR Malaysia, the Malaysia guys who have their way of trading. And what it means is, like, you'd have a bull candle, and then right where it closed, the next one would open. See? So they're doing a little smoochy right here. And then this one right here, same thing, see? Kissing candles, they call it. See, here's another one, see? Closed, and the next one opened. Closed, and the next one opened. I really don't know what it means, because I was really trying to understand what what the guy was saying. He had a really heavy, Malaysian accent, and I couldn't understand him, so I just shut it off, because I couldn't make heads or tails of what they're saying. I've heard it's really, really good. Have you heard of the SNR Malaysian strategy? Well, if you haven't, now you heard. Check it out. Not that I'm promoting them or anything. I'm just saying, hey, if you can understand them, maybe. I heard what they're saying is really, really good. So there you have it. Anyway, now what? Euro yen. Just the one trade there. Actually, there's a trade over here too from the UK session. It went down. It was a success. A high and a higher high and a lower high down here. Would have sold here. Down it goes. Euro yen. Oh, it's a little more choppy. You could say this is a double bottom right there. Yeah, right there. And right there. And right here. Went up 50 pips on the euro yen. Okay, let's look at the last two instruments. We're going to look at gold. Oh, wow, big. Big sell-off. I just got my last drop of water. I should have went and got some more. Yeah, we'll just make it simple, and we'll draw it from here. High and higher high. Right there, down there. So which way, if this is pointing down, which way is it going to go? The price. It's going to go down, baby. Down. So you would have got short right there. Stop, swing high. It was only 26 pip points. The stop. And you got 70 in the like 15, 20 minutes. You did good. Then we had a higher close right here, right? Higher close. Sell it. Down it goes. Here's another one right here. We would have done it, right? Higher close. You would have got in on this one, and it would have gave you some drawdown. That's what would have happened. But then you see, after this one came down, what does that mean? That means it was a hook down. And a higher close, down it goes. Because once you get in it, you're stuck in it, right? Yeah. So you would have suffered drawdown on that trade about 12 or 13 ticks. But then you would have got in here, like I said, and yeah. This is from the hook down. Anyway, it went down like 140. From the top here, it went down 200 points, ladies and gentlemen. 200. So, sellers of gold today would have done really good. Really good. Let me just squish that down. Oh. That's what happened. Oh, yeah. Anyway, I'm laughing at something in my mind, something about trading. But anyway, it is what it is. That's what gold did today. Let's take a look at our last instrument, which is oil. Whoa. What do you see at the bottom of today, ladies and gentlemen, of the New York session? What do you see? Do you see what I see? We see this. Right there like that. There it is. And you would have got long. And the stop would be at the swing low. And up we go, over 100 ticks, up to $72 per barrel on oil. Look at how they sucked people in right here. They got them selling in here. And then they basically took it right up and got it. Whoever was short down in here, their stops were right there. That's where the gold is. And what did they do? They went and dug up the gold. Yeah, it's crazy how these markets are manipulated. Like here's one right here. Okay. So right on the opening, because it closed right here at the 5, but look what happened. It went all the way down here. So if you would have got in long right there, it went against you like 30 points, 30 ticks. And if you put your stop here, for people who went long down here, I don't know. They went after the stops here. They went after the gold down here. Then they took it up and went after the gold that was sitting and resting right here. That's what they do. They just keep doing that. You would think it's like a hockey player coming down the ice, and he's on the the right side of the blue line or whatever, so he can be onside. Skate towards the goalie and have the puck and make it look like he's gonna just shoot it up into the right hand corner, and of course, or actually even the lower corner of the net, and the goalie has the reaction to go down, and then he does a flip around, and he backhands the puck right in the top of the net, and do it over and over and over again. That's what this is, man. That's what they do. That's what they love to do. It's crazy. Okay, here's a lower close right here. Buy it, up it goes. And there's more in here, as you can see. I'll just show one more. What I just explained to you about hockey, my brother-in-law, he used to play hockey, and there was these, like, they did this game, there was like 10 of them, and they kept changing, and there was like, I think there was 3 for the other team. They had 3 guys, and they had one guy, he did this like 8 times. What I just explained to you, where he went at it, he made the goalie think he was going to shoot it onto the right side, and the goalie would fall down, and then the guy would turn around, with the puck and backhanded into the top of the net. He did it 8 times in a row. And they couldn't keep up to this guy, and they couldn't get the puck from him. He was like an almost, we knew it before the game started. He was almost like he should be playing pro, like on the NHL. But anyway, that's what they're doing here all the time. They're faking you out. They're deking you out. They're making it look like they're gonna make it go down, and they take it up. They take it up, and then they make it. They make it look like they're gonna take it up, and they take it down. Or I just said that. The opposite of what I said. They're faking us out over and over and over again, and they're laughing at us. I'm telling you, they're laughing. Anyway, sorry to go on about that. It just makes me mad how crooked this game is, and if you don't know what to look for and do, you can lose real quick and real fast, as you guys know. Anyway, thank you for listening, thank you for watching, thank you for coming out. And if you have not subscribed, please do. I've lost a lot of subscribers lately. I don't know why. Maybe I said a few bad words. Come on back now. Come on, guys. I got good trading information here every day that will help you in your trading. So anyways, please hit the like button. It's free to do so. Hope you have a good afternoon. Good luck and good trading.